Hey, what's good, traders? A wonderful welcome to you all once again. Today, I'd like to talk about a beginner's guide to the market. Like, if I was trading for the first time, what I should be looking out for, and stuff like that, you know. And firstly, we're going to start with like the market phases. I'd like to keep this video pretty much short, so it won't be too lengthy. Okay. So you read books and they tell you different phases of the market, but what I think is there's pretty much two stages. Okay, a trending stage and a consolidation stage. That's just it. Hmm? We're gonna look at like um, a trending stage. Okay, it's when you see price moving, to a certain direction. Could be up, could be down, but it's moving. Okay, that's a trending stage, a trending phase. And then a consolidation phase is a phase where price is basically not moving in in any direction. It's just you call it range, range bound, choppy, whatever you want to call it. But the bottom line is it's not going anywhere. It's not doing anything. Hmm? So that's like the second stage of the market. So every market you see is either trending or is in a range or consolidating. That's just the two stages pretty much. And how you trade this is you pretty much want to look for entry points within a trend. Okay, like me pulling out a tool called a parallel channel tool, like that. So what you want to do is pretty much look for entries at this point, these areas here. That's when you want to jump in, for your entries. Now, it is best to trade trending markets. Okay, believe me, it is easier. Don't try and do stuffs like wanting to trade a choppy market or a consolidation phase. You don't want to do that. Okay, that's the easiest way to lose in this business. As far as you can find a trending market, like it's very very easy. It's like you open a chart and it's just there. If it's not trending, it's not trending. If it's trending, it's trending. Okay. Now, for the trending phase, you have in an uptrend, you have price making a high, a higher low, a higher high, a higher low, a higher high. So in a downtrend, you find price making once again in a downtrend, you find price making a low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. It's just like that. It's that simple. Okay. So in as much as you can actually track this, you're in the right direction. There are tools that will help you. You have your trend lines. You have like a parallel channel and all, where you can actually track the lows in an uptrend for you to look for points at which you buy, or you track the highs in a downtrend for you to look for a sell. There's still something else you can do. Uh, in some cases, you can have retests of previous structure like this, where you can trade off of. I don't know if I did that here. Okay, you can see this previous structural high became like support for this guy here, you know, and all. So this is how you actually trade a trending market. There are different ways you can do it. You can come in here, you know price is going up, and then when it starts retracing, you can drop lower to the lower time frame to look for an entry pattern down there, you know. But for today, we just want to focus on different phases of the market and what you should really be looking for. You don't want to be trading this, okay? You don't want to be trading this. the market is not doing anything here. You can see it's just bouncing off of its zone or something. Yeah, professionals might try and look for trades in the bounce in lower time frame, but believe me, it's much, much, much simpler for you to trade trending markets. Okay, so now let's go to the charts and let me show you what I mean by the theory I've been explaining. Now, this year is the Nasdaq, the NAS 100, and let me just turn off this indicator. It's called higher high, lower low live. It's just one indicator I throw in my charts every now and then. Now, in an uptrend, you find price. Let me remove this to make it clearer a bit. Okay. So, in an uptrend, you find price doing what? We said price will make a high, a higher low, a higher high, a higher low, a higher high, a higher low, and then the next higher high. That was what we said. And this is just like a live representation of what we discussed, You understand? So this is like a live representation of what we discussed in my in the theory I was teaching. This was the practical of it. And then let's go look for when the market was trending lower. Last year, the market trended lower a lot. Like Nasdaq lost a lot. Okay, so in here, you have price making a low, a lower high, and let's just call this a lower low, a lower high, and let's call this one here a lower low, a lower high. Now this is the practical example of a downtrend. You can see the direction of the market is downwards, so you want to look for markets like this to trade. That's the best way to be profitable in it. So you can draw trend lines in and around these areas, to look for sales, or you can just wait for price to bounce off of the previous structural levels like this to trade off of. You have that one there. You have some over here like this. You have this one here, and it's just like that. Okay. Now, one little tip I like to throw in is, before a reversal, structure actually change. What is structure? What we're talking about, like trend, high and lower lows and all of that, they actually change. Okay, you see price making a lower low, a lower high, a lower low, a lower high, but before the trend turns, you see price will fail to go making a lower low. That's in a downtrend. What I mean is this: you see price now coming down, a lower low, a lower high, a lower low here, a lower high, a lower low. Now, ordinarily, this should be a lower high, right? And then you expect a lower low. But no, when structure wants to change, it will not make a lower low. Instead, it will make a low that is higher than this previous one. And then it comes back in here to make a high. And then a higher low. This is how you know, okay, structure or trend has shifted to the upside. A higher low, and then a higher high, because this high here is higher than this high here. So it becomes a higher high, a higher low, a higher high, a higher low, right? And then a higher high. Now, there should be a higher low somewhere around here for a higher high. But no, this is what price did. Price came here, created a higher high, and made a low that was lower than this one here. So you mark it out. A low, a lower high, a lower low, a lower high. So that's pretty much the easiest way to understand what you call reversals in the market. And then, it goes deeper than that, but for the purpose of this video is just to show you like how to easily understand trends and then to profit from it. I hope this video helped. Please like and subscribe. It's a new channel, it's a growing channel. Just like and subscribe if you like the content to encourage me to bring more contents like this. Thank you very, very much.